Okay, good morning, everyone. First of all, to those of you who are here in the room, and also to the approximately 200 people who are watching this session online. Today, we're going to start proceedings with a reflective discussion about the role of finance in the net zero transition. As you've seen from the title, Clean Capital. What are the prospects for green tech financing in Europe and beyond? So today's discussions are quite high level. We're not going to get into very technical financial instruments, rates of return, cost capital ratios or similar. We're going to focus on latest trends and dynamics and more broadly, the role of different financial institutions in driving forward the net zero transition. So very pleased to have you with us. First of all, I would like to introduce our esteemed guests who have very kindly agreed to join us for today's session. So starting from the far end and coming closer, Anne-Marie Feinemann, who is the head of innovation for Swery under Vinnova, the Swedish innovation agency. Next to her, we have Marc Mawhinney, who has a brand new job as of last week, lead advisor for innovation and competitiveness department at the European Investment Bank. Next to him, Stéphane Ouaki, who is head of department at the European Innovation Council at the executive agency for the European Commission. And last but by no means least, Tara Lindstedt, who's board member and chief development officer for InoBat. And I should also add many years of experience in the tech transfer, commercialization and venture capital space. So, voila, want to sort of frame today's discussions also by a couple of things that we heard in yesterday's plenary debates. And in particular, a couple of comments, one from Christian Ehler, who voiced his concern about what he saw as a potential imbalance in the way that we're currently funding net zero technologies and R&D in Europe, a shift from basic to applied, with the pressures of delivery, of impact, of bringing things to market as quickly as possible, also in line with the ambitions of the Net Zero Industry Act. But then a more philosophical question, what does that leave in the pipeline for 2030 and beyond? What is going to be in the funnel? Can we ensure that the right kind of capital is going to the breakthrough innovators and scientists who are developing the next generation of clean tech and net zero solutions in Europe? The second one, which was raised by various speakers, was the need to make a more compelling business case for clean tech, as heralded by President von der Leyen in her State of the Union address. We enter the industrial phase of the Green Deal. So, as was mentioned yesterday, when the Green Deal was launched, we had green, but we didn't necessarily have a deal. So what role can the finance sector play in clarifying the business case for clean tech investment in the years to come, and what role for different actors in the public and the private sector in helping to make this happen? Okay, so that's the general framing of our panel today. We want this to be as interactive as possible, so we're going to give you plenty of opportunities to put your hands up, raise comments, questions, critiques, and to be part of the broader discussion. And before we get going, and as a sort of a lead into the first question to the panel, I'm just curious, from your perspectives, are you optimistic or optimistic or pessimistic about the state of clean tech financing in Europe at the moment? Who's in a good mood about it? Who thinks we're at the beginning of a brave new age for clean tech innovators and entrepreneurs? Hands up. Okay, and those who are a little more skeptical? Voila, and a number who are undecided. Okay, well, we'll see where we are at the end of today's discussions. But, okay, so we're going to start with sort of an opening question for the panel. And it's, again, quite high level, quite open. And it's the same question for you guys. How optimistic do you feel about the clean tech investment landscape in Europe today, and why? So, Tara, let's start with you.
I'm not really very optimistic, but then again, I'm not pessimistic either. It's business as usual. I mean, in Europe, we tend to have, in my experience, and I've been doing IP commercialization and industrialization of IP, primarily in sustainable and net zero goal sectors since year 2000. Actually, one of my first projects was Science Business. I helped the founders set up Science Business, and I'm a shareholder of Science Business. So that's how far I go back in this, right? I have to tell you, over the years, it's been a status quo in Europe. I live in the UK. My husband is a professor at Imperial College. We believe in R&D. Unfortunately, Europe and, by definition, UK, because we've only been out of Europe for a year, although it feels like 100 years, by definition, R&D is not given center stage. We have too much bureaucracy, we have too much red tape, and financial considerations take precedent. We are not willing to take R&D risk. And until we decide as a continent that we're going to take R&D risk and transform the way we think about rate of return, and that goes across all institutions, not just the EU, EIB in particular, I think that we would not be doing as well as other places, and especially in America. You've seen what IRA has done to our plans, right? I hope I didn't say too much.
No, not at all. Well, we're going to come back to questions about the IRA and its broader implications for Europe in a few moments. But, okay, Marc, EIB's been name-dropped.
Yeah,
so
as usual.
Where do you see
When
the
we come to
trends
the
happening at
Brussels
the moment?
bubble, there's always hostility to the EIB, and that's fine. It's one of the things.
I'm not hostile.
Okay.
I'm a big fan of the EIB.
But
actually, they funded a lot of projects for me, so big
Okay.
fan. I think that I've earned the right to say something.
okay, but in answer to your question about the state of green tech investment, I don't believe in perfect society, and I don't believe in a perfect market. At the moment, things are imperfect. But what I see is that from an EIB point of view, the EIB really started its journey in climate change and towards becoming the climate bank about 3 years ago. Now, the EIB, as it's set up in its statutes, is a co-investor. So a lot of what it does is in co-investing with other players in the market, either the companies themselves or other investors. And what we've seen in our journey over the last 3 years, which is still ongoing, definitely not finished, still a long way to go, but what we've seen is in talking to co-investors, we've seen them go through ambiguity. They didn't know what this was about. They needed to understand it, and that was part of the discussion we had yesterday. Then they've gone through anger as well as some of the regulation come in, and it looked very bureaucratic. And targets were set that with times that weren't clear to them. And then they've gone through fear as well through the IRA, and I know we'll talk about that in more detail, so I'll not dwell on that. And finally, what we see with other co-investors as we're talking now is they're looking at things from an opportunity point of view. They've begun to understand the ambiguity. They're beginning to understand that some of it's clearer, but a lot has still to be done. And when I look at that ambiguity through anger, through fear, through opportunity, that's change management. And that is typical change management. And it doesn't happen overnight. It takes a few years to take place. And from what I said, the journey for EIB to date has been about 2 to 3 years, with a lot more to go.
Thank you, Marc. And just to...
So I'm optimistic, I have to say.
Okay.
Yeah.
And if I can just loop back to something we discussed before the conference, you said the actual fund size that the EIB has is growing, right? From 6 to 8 billion. So from your perspective, it's sort of on an upward curve.
It's, as I was saying to Stéphane just before we started, the biggest challenge for me in my previous job, 14 days ago, was that volumes were going through the roof. Now, it's funny because, in a sense, a couple of years ago, we couldn't find people who wanted to invest. Now, who wanted to be invested in. Now, it's the opposite. The volumes are going through the roof. I managed a team of 22 people. Last year, they did a turnover of 6 billion as a team. This year it's on target for 8 billion, still the same numbers. So it's become a difficulty for us to work out where are the priorities, how do we move forward with this volume coming at us.
Okay, fantastic. So, Stéphane, let's hear your thoughts from the EIC perspective.
Reasonably optimistic, I would say. The reason is a bit what Marc has just said. What we observe is that there is clearly more money coming into that space. Clean tech has become, more generally sustainability, but in particular clean tech has become more accepted, more popular. There is more awareness. There is more big funds also trying to channel money into that space. So all this is very good. There is a huge effort on the side of public institutions to invest in sustainability, in clean tech ventures as well, like what the IB is trying to do, like we are trying to do as the EIC, which is clean tech is being one of our top priority. But what I also observe is a lot of impact funds have been created. A lot of family offices now are trying also to invest in those type of ventures. So there is a lot of interest. What I see, nevertheless, as a kind of a stumbling block or as a difficulty is that there's a lack of expertise, and that lack of expertise translates into not necessarily a lot of transaction being signed, because especially traditional VCs tend to still look for returns and tend to look for fast returns.
Yep.
So there is a great, I would say, emphasis on the talk, not so much on the walk so far. And that I think we need to make sure with the public institutions to de-risk and to provide the expertise to close that gap. And this is what we are trying to do with partners like the IB at the IC, because that's basically our mandate to try to identify deep tech ventures that can potentially attract fast returns, but on which you have, I would say, a longer time frame to do that. So we come in as a patient investor, and we are trying to find like-minded investors that can come with us. So we find more and more of those. But what we think is that there is a lot that can still be done in order to attract that. And when we say this, there is also, of course, a growing realization on the part of pension funds and those who move considerable amount of money in going into that space. But what we observe as well is, of course, they don't necessarily find the right vehicle in order to channel that money that they would like very much to invest in that space. So basically, there are challenges, even if I would say the general context is therefore better, and therefore I remain very optimistic that all this will eventually produce the right results.
Fantastic, thank you. So, Anne-Marie, from the perspective of a national innovation agency, obviously clean tech isn't the only thing that Vinnova's involved in, but it's obviously been a priority area for you. So how do you see the position of an agency such as yours in this landscape?
Well, as a public funding agency, sustainability is part of practically everything that we invest in. We do say invest, even though what we provide is grants. And this has changed. I've been with Vinnova quite a long time, and this has definitely changed over the last 10 years, and it's becoming more and more of a focus for the work that we do. And also, I would say that I choose to be optimistic about the investment climate in Europe, because we do have a lot of things going for us, I would say. We have a lot of interesting policy initiatives. We have public institutions wanting to do more. There is a lot of interest. That's what we see, at least. However, it's still work in progress. So we need to do a lot more. And one of the things that we try to focus on in Sweden, and also obviously in the connection with international collaboration, is to mobilize the ecosystem to get more interest and more action from the actual ecosystem. So it's now, in addition to all of the policies, we need to have little bit more action. It's now all about the implementation of all of the good ideas regarding policy and investment instruments that are out there, and actually implementing it in a way that mobilizes the system and gets us good results and good projects going forward within this space.
Okay, fantastic. Thank you very much. Now, we've touched on a few things here which are going to inform the conversations going forward. One of the ones that I picked up on also when we were preparing for today is this frustration or a perceived frustration with perhaps the conventional world of VC, of private equity, and as you've also mentioned, right, the short-termism. So I'm just wondering, in terms of mobilizing different types of investors willing to take a more long-term approach, how can we do that effectively in Europe? And Mettler yesterday referenced the Clean Tech for Europe platform as a way to try and bring together a community that takes a longer-term view on investment in clean tech. There's obviously the potential signaling of the big institutions like your own, Marc. So how do we shift this dynamic to build a stronger ecosystem in Europe with a different investor perspective that looks at the long term, is willing to take more risk, and that actually understands the long-term potential or even complexities of bringing these new net zero technologies to market? Who'd like to go first on that? Marc, let's come to you first. Let's think about the role of the EIB in sort of signaling, right? I mean, what you're trying to do to bring in the right kind of investor profiles to join with the public funds that you're managing.
Okay, I mean, it's a very interesting subject. With signaling, I think where we stand at the moment, as I said, we've started the journey on the climate bank, and the two signaling effects that have the greatest impact for the bank at the moment are the signaling that revolves around the fact that we want to drive forward climate change, or response to climate change. But at the same time, we want to signal support for European industry moving forward. Now, there's a trade-off with that, and a difficult trade-off, which is not necessarily the same thing at the moment. Yeah. So I think one of the things that I see, and particularly when I come down to Brussels, is, and it was great to hear Christian Ehler yesterday talk about the trade-off. I think for us, many times we're seeing politicians who talk the talk, as Stéphane said, but don't relate to the fact that there are trade-offs associated with that, difficult trade-offs. I mean, for example, with the bank at the moment, as a result of moving towards the climate change, we've opened ourselves up to transparency. We have a wider set of stakeholders than we have ever had in the past. That includes NGOs. That comes at a price. Trying to please the NGOs at the same time as we're trying to please industrial players, changing, moving from heavy industry step by step into a cleaner world.
Okay. Now, Tara, you've spent a long time in the VC private equity world, I mean, so what's your take on this?
All of this is very encouraging, all of you, but 2030 is 7 years away. We don't have a lot of time, and we haven't made a great deal of impact on climate change. I now speak as an engineer and somebody who's been trying to get somewhere with 2030. My first job was in Rio in 1992. I was part of the original Rio summit. And I have to tell you that I've stopped attending events because we have more and more events. We have COP28 now. We had Africa Climate Change Week last week. We have everybody in the UN this week. We have something else coming in somewhere else. There's a lot of talk. There's a lot of talk, and there's a lot of politicking, and there is a lot of head in the sand pretending that we're going to be okay. But you know what? We're not going to be okay if we don't do something that is out of the box, right? Understanding, change management, getting the signals. We're past signals with respect. We need decisive, running to the end action here. And what I see as somebody who's been working with startups to scale up and to get funded, it's the mindset of traditional investors who have got a new set of theater clothing. They talk about ESG, they talk about impact investing, but by definition, if you're trying out new technologies and if you're trying to do impact investing, which includes, quite rightly, the NGOs and the local stakeholders and the investments that you have to make locally, you're not going to give 30% return on investment, which is what they still want, right? Impact investing has a different mindset. It has a different framework. Risk aversion is ingrained in our financial institutions. EIB wants to be risk neutral. That's why you have to go through a lot of effort to get yourself into trade finance, into this, into that. Sorry, I'm taking too long time here. But with respect, we don't have time to bring people on board with change management, with training, with signaling, getting everybody happy, because we could all basically fall off the cliff very happy together.
Can I,
Of course, go ahead.
can I ask a question in response?
Yes, please.
And that is, if you don't bring people on board, how do you intend to move it forward?
I have an answer for that.
Yeah.
If you're still trying to bring a certain group of people on board, they're the wrong people in the wrong jobs. With respect, you need change of people. You need the younger generation to come forward and take risk, because without taking risk, we're not going to solve the problems. The age profile of people in decision-making seats, in positions of power, has to come down, not up. That's my view. We have to give the younger generation a chance, because they are willing to take the risks that we are not willing to take. I'm very passionate about this. Maybe too much emotion here, but clean tech by definition doesn't change the world. It's how you implement it in an industrial situation, and technology by definition has obsolescence. Technology obsolescence is a very big risk to manage. Just think about mobile phones. We all started off with Nokia, Motorola, all this stuff. Today it's only Samsung and Apple. Just think about wind turbines. Just think about everything that's gone through this S-curve of obsolescence. If people hadn't invested, hadn't taken those chances, we wouldn't be where we are with our renewable energy achievements. It's amazing what Europe has done. But we always lose out because we think everything is going to be okay, and it's not. Sorry.
Very good. Thank you, Tara. We'll probably leave the reform of democratic systems to empower young generations for later discussion. But Stéphane, I mean, you're at the interface of all of this, right? I mean, you're dealing with communities of visionary entrepreneurs, startup companies. You're also talking to all different parts of the investment landscape and of financial institutions. So how do you manage this aspiration to do risky, bold new things from the entrepreneurial community in Europe, the innovation community, and financial institutions that perhaps have a more risk-averse mindset, as Tara has said? How do we somehow reconcile this? What can the EIC or the Commission do more broadly to try to change this mindset, to become more risk-tolerant when it comes to clean tech investments? What do you think can be done? And what role for EIC in all of this?
Well, first of all, I would say that given indeed the targets that we give ourselves and the reality of climate change, we are, 5 minutes before midnight, and it seems that everybody is still very happy to do small incremental improvement at the margins of the industrial processes that exist today. And when we need is a complete revolution on these industrial processes. So I would tend to agree with you. The challenge that we face is really staggering. And the action that is needed there is not really taking place at the same pace in line with the objectives that we have. So I would echo this worry. Now, what we are trying to do with the EIC is not to basically move everything upside down at the level of democratic societies, because we don't have the mandate to do so. We are civil servants after all, so we just obey our political masters. But what we're trying to do is the best we can with the means that we have. So we're trying to persuade basically the more traditional community of investors that actually investing in those clean tech ventures can bring a return, maybe not as immediate or maybe as not as plentiful as the traditional investments, but they can bring a return. And in any case, the change that is going to take place puts them in a situation in which either they join it now or they end up on the losing side later on. And I think that fear of obsolescence is a very powerful reasoning, very powerful signal that you can send to the investor community in order to make them embrace change and try to invest into new things. But of course, the change, I mean, to echo also what was said on industrial challenges, what we see is that it's extremely difficult to actually, when you study something in the lab and you start a startup on this, to make the jump from the piloting of the technology that can have an impact on major industrial processes like cement and so on, you know, the big things that really emit a lot of CO2 and needs to be actually addressed. I'm not talking about electricity generation, which is a pretty straightforward situation to do it, even if we still are not there. I mean, by the way, parenthesis, something that is, from a technological point of view, very easy to do. We are still not there, but okay, let's put this aside. And all these other things on which the technologies are appearing, but they require a really big investment, and also on the part of corporates to really believe, not just simply on piloting it in order to showcase how these technologies will go, but really to change their existing processes in order to make them net zero. And we are, I think, on the brink of that. I mean, I'm not saying that we are already there, but I think we are at the brink of that, and we really try to push now in that direction in order to make this. So how do we do it practically? We need to build coalitions. We need to build aligned interests between different actors and try to ensure one initiative at a time that actually you can demonstrate that this can work. And it can work in the area of these industrial processes. Like I said, it can work when you look at, I don't know, sustainable fuels. You talked about Ann Mettler and the Clean Tech for Europe platform, on which we are also partner with, because we believe that by bringing together those actors, you can indeed identify a number of concrete action points that then can bring actually change. And then the signaling effect, the replicability effect of that is very, very powerful towards the rest of industry that doesn't want, of course, to be left out when they see that another one is actually showing the way and can actually implement it. We don't have a better option right now than to do it. I agree, it takes way too long, and it's not delivering the result fast enough right now. But that's what we can do in order to try to basically jumpstart this process in order to try to achieve results on this. And it is a very complex issue because you need to still play the game. You need to still be able to evaluate the technology, to still be able to assess the risk properly, even if it's tremendously complicated in those areas, in order to be able to convince investors. So it's not a very easy situation in which we are, indeed.
Absolutely.
And
Now,
global competition. And there's global competition as well.
Exactly.
okay, yeah, I'm glad you mentioned that, Marc. We're going to come back to international cooperation and dimensions in a minute, also with the IRA. So I'm going to ask one more question to the panel, then I'm going to invite you to raise any questions or thoughts you might have. So allow the wheels to turn for a couple of minutes. But I just want to sort of try and steer us to the other side of the fence. And the companies themselves that are trying to develop these clean tech, net zero technologies, and what you hear or see from them as the main barriers or obstacles in acquiring finance, in creating a kind of sustainable growth and development curve for the years to come. So let's start with Anne-Marie. I mean, from a Vinnova perspective, you have a huge portfolio of companies that you're supporting through grants, not necessarily equity investments in the way that some funds like ERC are now doing. But what do your companies complain about? Where are their pain points? What would they need in order to
Well, first
move
of all,
forward?
I'd like to say that public funding has a big role to play when it comes to reducing risk, first of all. So, and it's not just in financing innovation initiatives. It's also what the various public actors can do in providing prerequisites for innovation and prerequisites for developing new technology and and new initiatives. So, and it could be things like infrastructure, for instance. We're talking things like road, electricity, railways, those sort of things. So there's a lot of things that public money can do, regardless of whether it comes from a funding agency or not. And also innovation procurement. I mean, the public sector is a huge procurer of things and services, and innovation procurement is something that I think could be used even more to kind of help the market development of innovations. In addition to that, though, just getting back to your question, I think that what we hear is that even also from the companies, they think that the public money also needs to be more long-term. That's one of the things that they would like to see, because if you go into a large project with a large amount of funding, you need to know that your partners in that project are actually also going to stay. But you need a perseverance from the public money as well as the private money. I think that's one of the main things. Also, I think what we work with, which I think is also quite important, is that it's not just finding corporates to invest, we need them to participate. That's the thing. We work a lot on system innovation. So we need, and cross-border innovation. When I say cross-border, I don't necessarily mean not only across national borders, it's across borders between disciplines, between thematics, between sciences, between different types of actors, public sector, private sector, academia, large corporates, small corporates, etc. And we need all of them in order to be able to do innovation on a larger scale. And participation from the start, I think, is one of the ways, one of the things that we're working with to try and achieve that. And also with public money, this might be true for private money as well, but with public money, we are actually, we're able to require things from the projects that we fund. So we can put requirements on, well, you have to have an academic as a partner in the project, or you have to have a certain ecosystem, or you need to have a specific type of discipline, competence within the project in order to get your funding. Otherwise, you won't get it. So that's a way that we can also work on trying to change behavior within the corporates that we fund. They don't always like it, I must admit, but in the long term, we're hoping that it's going to, and we believe that it's going to make a difference.
Great, thank you, Anne-Marie. Sorry, you want to pick up on that immediately?
Absolutely. I'm married to a Swede. My husband is Swedish. I think the Swedish system really does work because there is hands-on assistance for actually industrializing technology. Technology by itself doesn't work. You have to have the right process to get it into industrial state, and actually getting the startups really. I mean, I really think that we should have a scattergun approach and finance as many startups as possible with public money, and let's see who can win and who can lose, because that's the only way we can beat global competition that you mentioned, because, you know, we very misguidedly were trying to compete with the Asians in decarbonization technologies, the Chinese, the Koreans, the Japanese. Actually, we need to partner with them. We need to collaborate with them, because the gap is way too wide for us to catch up, especially since in Europe, especially in the UK, as soon as we have something amazing by way of a new technology, a breakthrough, we sell it to the highest bidder, you know, and we don't keep it, we don't grow it, we don't sort of, we're very good at just getting short-term money in. So I think that getting the partnerships and finding a different way of competing through alliances, I think, is the key for Europe to succeed.
Okay, well, let's stick with the earlier question just for a moment. I mean, what barriers and issues
You're a bit
are
bossy
the...
today.
I know,
You
it's
just keep
early.
pushing.
I've only had one coffee. No, but I still think it's an important question. And what are some of the barriers for these companies on their growth trajectory, and particularly through a financing lens, but also potentially regulatory, lack of access to industrial value chains, if the big companies aren't present in the earlier stages of the technology development process, how to bring them in. So let's get the European perspective from
Well,
EIB first, EIC second, alphabetically.
Okay. Allow me to? Back to the basics, actually. The bank does a survey of firms every year. And the latest survey, not directly related to what you're saying, but the latest survey finds that the big barriers that the firms see themselves, and by that I mean the SMEs, 82% of them see energy costs as the number one problem at the moment, and 42% of them related to that feel that they have to prioritize investment in energy efficiency. And then the other big thing that came out of it was that 57% of them are concerned about the physical risks of climate change and how to define them. Now, when I look at that, what do I interpret that as really, and the first two, the energy cost, the investing, having to invest in energy efficiency, that's short-term survival. And so survival is still something that they're very concerned about. The concern about physical risks of climate change and the definition of them is back to what we were talking about yesterday in the discussion, that ambiguity there is around all of this still.
Great, thank you, Marc. Now, Stéphane, floor is yours.
Yeah, no, I just wanted to echo what has been said earlier. Indeed, innovation procurement is very important. We try to stimulate it. We are creating coalitions of innovative procurers across Europe in order to try to stimulate that. The Americans are far better than we have been on this front, so there is still a lot that can be done in Europe to catch up. Public money needs indeed to go long term, but then when you try to put it in practice, in other words, when you have selected a number of companies to which you give a grant, and now what we give a bit of equity, of course we need to be there on follow-on rounds, but inevitably then the budget that you have to allocate to it balloon, because every follow-on round you increase the tickets, and then very quickly we're out of our breath. I mean, the Commission put forward a step proposal to try to address that precisely because we don't have a lot of budgetary capacity to do so. So I think we need to really move now on the growth stage in order to allocate the funds in order for these public initiatives to continue to support what we have been developing at early stage. This is quite a big challenge that we see now. Well, I mean, partnering with corporates, I agree now, a requirement by the public sector. What we noticed is that it is tremendously difficult to put those type of requirements vis-a-vis other investors, because everybody, I mean, just let's be very frank, everybody wants to make money, and this is on the side of investor. It is also on the side of the founders. I mean, let's not be blue-eyed about it. I mean, many of them are in it, and if they are not in it because they are real innovators, there is always a bunch of consultants that will come and tell them, oh, man, you're sitting on a pile of gold. I mean, are you crazy to sign this or sign that? So as a consequence, this attractiveness of maybe becoming a unicorn fast and so on makes it extremely difficult to implement those public policy goals or requirements that we may have, because everybody wants to loosen the requirements in order to be able to sell faster, and then to have the problem that you mentioned, that we act as a very big incubators for big American VCs to come and basically harvest what we have managed to develop at early stage in Europe. So indeed, we are investing in a lot of ventures, as many startups as possible with the budget. Those we can actually make it and emerge, because there is a lack of growth stage finance in Europe. well, obviously, American VCs come and then they harvest that. So I think this is where I see here the problem. We need to be able to indeed impact those dynamics and really try to see how we can help those ventures, how to can help those companies grow, and we are trying to do that by throwing at them different options, also on helping them, for example, on energy efficiency, decreasing their energy cost and so on, because this is really indeed what they see as a matter of survival today. But we need also to realize that the public sector is facing a lot of, I mean, it's not so easy even from the public sector to implement those things. It's very complicated in practice because basically, well, everybody wants to, or if you're sitting on a good technology, they want to grow fast, they want to be able to convert their shares at the next round at a big premium and have a nice exit, rush to IPOs. And often they are very happy when a big corporate, whether from anywhere in the world, actually comes and buy them off, because then it means that they succeeded. So, I mean, we need to play with those dynamics. There is no easy solution to this. And in practice, you know, I can tell you the adventure of the IC, we started with this, okay, let's help the innovators and so on. Yeah, but, you know, in practice, you see that the innovators often, they tell you, yeah, thank you very much, but...
Okay, that's a great set of perspectives. Let's turn to the audience. Does anybody have any comments or questions that they'd like to raise at this point? If not, we have more, but I want to give you the chance. Anybody?
Well, we must have been really interesting. You have nothing to say. How amazing. I think that's, personally, I find that amazing. Don't you want to say anything? We've been talking at you for so long now. No?
No, still a bit too early in the morning? Yes, one at the back, Gareth McNaughton. Try
Gareth
again.
McNaughton from EIT, Urban Mobility. So yesterday we had a wonderful intervention from the Deputy Director General, Ruta, on making Horizon Europe projects. We don't do this economic viability. It's like the project and the purpose is enough. Was there any recommendations or ideas that you could put forward that might help that 100 billion to be more effectively directed? What would that be? I would love to hear your opinions.
Great question. Who would like to go first? Let's start with Marc.
Start, and this is not an EIB perspective. It is more a perspective from my previous job 14 years ago when I was at Oxford. And my understanding, unless it's changed, is that there was always there's been a requirement over the last 7-8 years for there's a question about tech transfer and how the project will be transferred into a technology development. Now, when they were talking about the economic viability case, that
Ideas with STEP and all the others, we make a mistake. In my view, as a user, as a developer, we make a mistake between R&D and clean tech development risk, the actual technology, and application, industrialization, tech transfer, if you like, risk, because they're two different things. And as you said earlier, you could have great success in the laboratory, you could have great success at the pilot stage, but as soon as you want to reach industrial stage, where you can play globally in that arena, it's a different ball game. The number of companies that fell after doing a successful SPAC because they had a great pilot and went to an IPO so early, jumping to IPOs, as you said, to get themselves into a lifeboat and out, because they're frightened of that big step of industrialization. And geopolitics comes into it more than ever. We get away from tech, from engineering, from science, aspects into geopolitics that should remain nameless. And suddenly I realized that for us in mobility, in Europe's biggest industry, which is tier 1 car making, almost everything comes from somewhere else. Big giga developments. And for that, you need all kinds of money. You need public money, you need the EIB, you need your institutions, you need everybody to acknowledge job creation in these sectors for Europe should be part of tech grow. People should be the same as machines when you do the project plan. Humans as well as machines have to be part of the same business plan. And you have to be very pragmatic about it, not to allow tech transfer to happen so freely. That should be a condition of funding, that at the slightest opportunity thou shalt not sell to the Chinese. That's, I think, the only way you can keep something of value here and keep jobs for people.
Stéphane and Marie, would you agree with what you've heard? Stéphane, you first.
I mean, we had a number of successes in Europe. Let's say maybe not as massive as which in the battery sector. Northvolt was piloted by us, and then we made the jump with the help of the EIB on a huge factory. I mean, there has been, when you put together all these different instruments, on some sectors we have managed in Europe to mount a reaction, maybe not as massive as you would have liked, but we have managed to do this. But I agree with you. Often the companies are missing the jump to the industrial phase. This is where they fail. In my personal opinion, I think where the great strength of the American VC industry as well is that they have the experts that can mobilize because they worked on a previous venture and they reconvert them when there is a promising one, and they throw those experts at them and they tell them, okay, now they are at the stage of moving from pilot to industry. How do you do that? Help them do this. It works very well in the Silicon Valley to do this. In Europe, we have to do that with our own large corporates, where probably often they are missing in action. They are not there enough. And this is where they could make a difference, because we don't have this agility of the system that exists in the US. And this is where, of course, a lot of the companies, a lot of very good ideas fail. Or if they don't fail, the industry has too slowly, and the same technology or parallel technology is being developed somewhere else in the world faster, quicker, and eventually the European company does not become the global leader. Often this is what's happening. It's not just simply that, often we see, okay, we are piloting a technology and that's the only one in the world, but actually it's not the case. In most of these technologies, you have different companies that are emerging approximately at the same time across the world, but those that are growing in Asia because they are supported by the Chinese system, or because they are relying on the Silicon Valley system, they grow faster, even if they don't have the best technology in that area. This is very important. Often the best technology is in Europe, but we are not managing to make the jump to the global leadership because of this connection to the industrial challenge. This is really where we need to really work on, and I think that for Europeans it is really to develop the interaction, for example, with the large corporates. I mean, some countries have been better than others. I mean, Sweden is probably an example we should follow there in order to make that connection work better in Europe.
So just a question, is corporate venturing a missing link? I mean, do we not have enough engagement with these funds, that the biggest R&D investors in Europe, the Siemens, the large manufacturers, the industrial engineering companies, the pharmaceutical companies, many of them now have these investment vehicles, which in principle should be a natural landing space for these new technologies to be nurtured, developed, kept in Europe. Are they present enough?
An observation, I don't know the answer to that, but an observation is that in the due diligence that we do within the bank when we're working with when we're working with small companies, we see the names of corporates on a very regular basis. So they are investing, but I think it's passively maybe. What do you?
Yes, correct.
Yes, I was going to say that it's not necessarily only the corporate venturing arm of corporates that we would be looking to have projects partnering with, but it's rather the actual research and business parts of the corporates, because that's where you can actually get, well, if you're an SME, for instance, that's where you can get help in developing your technology, in verifying it, in trying to find a market position, possibly a first customer, etc., etc. So having the corporates being active in the projects rather than just providing money, I think is actually more important. And if we can get more European corporates to work in that way, I think that would be very, very beneficial for all of us.
Yeah.
Yeah.
Just add one thing.
Yes, please.
So I think absolutely, we are now on the right, sort of the pulse of the whole thing. Europe stopped being industrializing when we stopped industry. We closed down the mines, we closed down major factories, and we went for services as opposed to industry and industrialization. The critical issue in Europe, and Northvolt is a good example, is going to be more successful in Canada, I believe, than in Europe, because we don't have what it takes. We don't have the critical raw materials because people don't want a mine in their backyard. We need critical raw materials. That's European. There's lithium deposits in Europe, but there's manganese, magnesium, all these things in Europe that companies are trying to harvest, but they can't because the public, as you said, we're a democratic society, and the public don't like a mine in their backyard, even though it's the only way to sort of stem climate change. So we need, as Europeans, we need to promote heavy industries that can be green, you know, environmentally acceptable mining, environmentally acceptable aluminium, you know, the green aluminium, the green steel. And that's the role of the corporates, to me, that make all the sense, because realistically, European wealth came from fossil fuels and heavy industry, right? Now, we have to use that knowledge of Shell, BP, and Arcelor, and a lot of other big industries who want to transfer from fossil-based to decarbonized, you know, space. And that is the opportunity, because without it, the Northvolts of this world will go to Canada, Volkswagens of this world will go to America, and, you know, what are we going to do then? So I think we need to change the mindset about industrialization and what it takes, and then promote different ways of industrializing that is green. So there's a green aluminium project happening in Serbia. It's going to be Europe's first aluminium smelter. And I'm really watching that with interest, because can it happen? Will it work? But of course, there are a lot of NGOs trying to stop it. Rio Tinto's mine, the Yada mine, it's the biggest discovery of lithium outside of China. Rio Tinto's had this concession for some time. They're trying to do the most environmentally acceptable mining. They're stopped. They can't do it. Their license has been frozen. So how do we get off this block?
It's a good question. Well, we only have a few minutes left, but let's come back to one thing which I promised we would talk about, and which perhaps sort of wraps up this perspective of Europe's place in the world when it comes to clean technology development, the net zero transition, and of course it's the Inflation Reduction Act. And of course, when this was announced in Washington, there was this sort of frisson of panic that seemed to spread throughout public and private sectors in Europe. What will it all mean? With a little distance from the launch of the IRA, where do we see it today? Is it actually an opportunity for Europe to have the US so committed to this green tech net zero transition? Or does it actually pose more of a threat unless we start connecting some of these dots that you've highlighted earlier in terms of the industrial ecosystem and participation in the technology development processes, new models of finance, etc.? What's your take on IRA? Anne-Marie, would you like to start? Sorry to put you on the spot, but...
Yes. Well, on that particular issue, I don't really have very much of an opinion, so I think I'd defer to my other partners on the panel.
Very good. Marc, let's come to you.
Okay, well, I have to be careful here because the president has written an article on this. So there's a the current president.
Of the US?
No, the current
The
president
EIB.
of the EIB.
Oh, I see.
Yeah.
Oh, I thought you meant Joe Biden. I was surprised that he wrote an article.
No. So there's a corporate line, but I suppose in essence, what I would say is what I said earlier about the change management, and we've watched how everybody has, not everybody, but the corporate players that the bank works with have gone from fear to seeing this as an opportunity. Now, whether they're looking at twin track They're looking at doing what they do in Europe and doing what they do in America. And it's, as you've said, it's about joining the dots across the Atlantic.
Would you agree, Stéphane?
Well, I mean, there are many ways to look at this issue. I would say, I mean, obviously there is a whole political discussion about pretty much exempting Europe from the consequences of IRA, implementation of IRA in the US, so I will not go into that political discussion, obviously. What I can say is, of course, it has put back America on the priority list of the clean tech sector, which was, you know, basically developing much more in Europe than it was the case in the US. So from that perspective, there is a rebalancing effect that is unavoidable. But the previous period was kind of unusual in the sense that America had, to a large extent, deserted pretty much that area, and European innovators were crossing the Atlantic in the other direction to come to Europe. So I think there is a rebalancing effect. I think many consequences, I mean, you talked about Volkswagen earlier, you can already see in the sense that many manufacturers want to be within the walls instead of being outside the walls because they don't know what's going to happen. So you have a lot of opportunity migration of manufacturing facilities into the US in order to benefit from the US market, something that we would like also to benefit from in Europe by, you know, putting together maybe a similar type of incentive in order to produce the same type of, I would say, of effect. So I will just stop at that.
Sorry, Mark, one more comment from you, and Tara.
One of the things I would say, though, is that a similar scheme is going to be a difficult thing because it's a tax-based scheme, and we have 27 tax systems.
So I've worked half of my life, or professional life, in America and half here. So I have experience on both sides. I'm active, very active on the IRA scene. But from experience, I can say that American schemes, typically tax-based, are typically as good as the life of the presidency. You know, how many times the president gets elected, then you have that level of time in front of you. Mr. Trump did a lot of damage by taking America out. Thankfully, he only had one term, right? Now, let's hope that this administration is longer than one term, because then IRA has a chance of setting roots. Because there are already moves, for example, in Florida, Governor Rubio, he's got the Repeal Act. He wants to make sure that non-Americans, in particular Asians, don't get benefit from IRA. However, what he doesn't realize is without the Asian involvement, American industry can't benefit in the lifespan that we're talking about. So you've seen that with General Motors, you've seen it with Ford, you've seen it with, you know, there's a lot of geopolitics involved in everything we're trying to do with decarbonization. And that's understandable because the era of climate change, the carbonization era that we lived in, which was the 19th and the 20th century, was all about the supremacy of the West, you know, the big oil companies in America and in Europe. And that's how we developed our world and our carbonized climate. So I guess the solution will come from there, but it goes again back to what the voters will allow, what the voters want. You said we are a democratic society. Would the voters of Canada continue voting for mining and heavy industry so the rest of the world can benefit? And would the voters of the United States continue voting for jobs in this way and mining and heavy industry so that they can play in the global arena? Would Europeans go there? Those are the issues that stop clean tech industrialization and climate change impact. It's the mindset, as you said, the changing of mindsets gets back to the voters wanting decarbonized lifestyles and jobs. And I think most of that today is not in favor of Europe. It's in favor of Canada. It's in favor of the United States at the moment. But we'll see how the dice falls, right? I mean, we are happy to do both sides. We're happy to play in both arenas. The twin thing doesn't work. I mean, UK thinks that, yeah, they're part of IRA, but actually, honestly, By the time you've gone through that paperwork to get yourself accepted, I think I'll probably be dead, and somebody else will have take my place. You know, so let's be realistic. It's not going to happen.
Okay, well, that's a very philosophical note on which to end. Thank you very much to our panel, to Anne-Marie, to Marc, to Stéphane, and to Tara. Please join me in thanking them. Thank you also to our viewers online. We hope you found this an enlightening and stimulating set of discussions. So we now transition back to a coffee break in the same room as before, and then our closing plenary block from 11 o'clock until 12:30, unless I'm much mistaken, will be next to the coffee room on the other side of this floor. So thank you again for taking the time to join us, and we'll continue this over coffee. Thank you.